Hello and welcome. My tax accountant has put together this briefing to get you up to speed on a really significant UK tax ruling, Elborn versus HMRC. Now, this is a big one. It's a decision that could literally save some families a fortune in inheritance tax, and we're going to break down exactly how. It's a pretty wild question, right? Could a tax plan that's, over 20 years old actually end up saving your family a fortune? Well, for a whole lot of families, a strategy they set up way back when is suddenly front and center again. And we're talking about a lot of money on the line. And when I say a fortune, I am not kidding. Look at this number, £700,000. That was the actual tax bill at the very center of this huge legal fight. A bill that, believe it or not, got completely thrown out. Yep, that massive £700,000 bill just gone. Wiped out by a landmark ruling from the upper tribunal. The case is called Elborn versus HMRC, and it's a real game changer. It's basically given the green light to a pretty controversial tax planning scheme that was popular years ago. And trust me, this decision could affect thousands of families all over the UK. Okay, so what is this scheme we're talking about? It's known as the Home Loan Scheme, or sometimes the Double Trust Scheme. It was a really clever, though let's be honest, pretty controversial plan that a lot of people used back in the 90s and early 2000s to try and get a handle on their inheritance tax bill. So here's the basic idea. In a nutshell, a homeowner would sell their house to a trust that they themselves controlled, but instead of getting cash, they'd get back what's called a loan note, basically an IOU for the value of the house. Then they take that loan note and gift it to a second trust, this one for their kids or other family members. Let's walk through how it worked, step by step. First, you sell your home to trust number one. Simple enough. In return, you get that IOU, the loan note for the home's full value. Step 3, you gift that loan note to a second trust for your heirs. And now for the big one, the most important part. You had to live for 7 years after making that gift. If you did, poof, the value of your home was basically taken out of your estate, at least as far as the tax man was concerned. Now, you can probably guess that the tax authorities, HMRC, they weren't exactly thrilled about this plan, and that's what led to this massive legal showdown, the Elborn estate versus HMRC. Yeah, not thrilled is putting it mildly. For years, HMRC has been calling these schemes aggressive tax avoidance. They basically argued it was just a sneaky way to use a loophole, not real legitimate estate planning. And it was this long-running battle that finally pushed the whole thing into the courts with the Elborn case. Okay, so the whole legal fight really boiled down to one tiny but crucial detail. HMRC's argument was that this was a gift with reservation. Now, what that means in plain English is you can't get a tax break for giving something away if you keep using and benefiting from it, like continuing to live in the house. But the court, the upper tribunal, saw it differently. They said, nope, the debt here was owed by the trust, not by the individual person. And that little legal distinction, it changed everything. It made the whole scheme valid.
Right, so that's the backstory. But the big question for you is, what does this all mean today? Who really needs to be paying attention to this?
Well, this could be a major wake-up call for you if any of this rings a bell. Think back. Did you, or maybe your parents, set up one of these double trust schemes way back when? Was the house worth a decent amount at the time, say somewhere between £400,000 and £2 million? And here's the key. Did the person who gifted the loan note live for more than 7 years after they did it? If you're nodding along, then this ruling could have a huge impact on your family's finances. And the difference we're talking about is just staggering. Just look at this example. Take a £600,000 property. The standard inheritance tax bill, at 40%, would be a whopping £240,000. But with one of these schemes now deemed valid, that tax bill could drop all the way to zero. Nothing. That's £250,000 saved. It's incredible. Okay, so if you're thinking, hey, this might be me, now is absolutely not the time to sit back. It is time to take action. So let's go through a clear plan to help you protect your state. And here's exactly why you need to act fast. This whole thing might not be over yet. Word on the street is that HMRC is thinking about appealing this decision, taking it to a higher court. And if they appeal and win, well, those massive tax bills could come roaring right back. So here's what you need to do, a 5-step plan. Number 1, go find all that old paperwork. Dig it out of the attic, the filing cabinet, wherever it is. 2, double-check the date of the gift to make absolutely sure you're past that 7-year rule. 3, You need to look into something called the pre-owned assets tax, or POA. It's an income tax that can sometimes pop up in these situations. 4, and this is the most important one, you absolutely have to talk to a tax professional. Do not try to figure this out on your own. And finally, number 5, with that expert advice, you need to seriously consider if and how to unwind the whole scheme. Okay, let's pull back for the big picture here. Figuring out what to do next is going to take some real clarity. This ruling is a huge win for taxpayers, for sure, but the situation is still complicated, and it's definitely not over yet. So it all comes down to this one really critical question for you to think about. Yes, it's a win for now. That's fantastic. But if HMRC does decide to appeal, is your estate plan strong enough to withstand that challenge? Trying to deal with these old, complex trusts and potentially going head-to-head with the UK's tax authority, that's not something anyone should be doing by themselves. This is exactly where you need specialist, expert help. It's absolutely essential. And that's where the inheritance tax experts at My Tax Accountant come in. They can help you get that clarity. They'll look at your specific situation, review everything in light of this new Elborn ruling, and help you make sure your estate plan is solid. Don't leave things to chance. Give their team a call and get the answers and the peace of mind you need.